Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what is going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all of these topics and sectors, looking for investment opportunities, sharing those opportunities with everybody in the community, and sharing my approaches, strategies, and everything else that I use in the markets. And we've got a special coupon code. Special is the code. 50% off the first month only on the monthly membership and a $100 discount on the yearly membership. Uh, all of that information on the website is transferred through two mechanisms throughout the week: a midweek update, where I go through individual companies and setups that I like. And then on the weekend, we do Q&A sessions where you guys can ask me whatever you like. Whatever you like. Psychological questions, individual companies, macro, whatever it is. All right, so against all odds research. Who's coming to the Gold Rush live today? So Estraza will be live with me today. Can't wait for this one. And he's got a year-to-date commodity sector returns. GDX 120%, URA 83%, XME, which is a metals uh, index, or ETF, 67%, COPX 58%, lithium 43%, SLX, which is steel, 38%. And then you've got XLE at the bottom, 6.3%. You know which one I like coming up here? I like the ones that people aren't looking at. That's the ones I like. And he's missing REMX, which is another rare earth metals, which has done a pretty good year as well. So yeah, GDX is definitely the best, 120. This also is a function of the market condition that we are in. What does that mean? Well, the precious metals miners and precious metals themselves outperform when you get a slowdown. If it's inflationary or not, it doesn't really matter. It's the slowdown, the safe haven asset, gold, that performs really well when things start to slow down. And that started in 2022. We had disinflation from 2022. Gold's been rocketing higher. The miners have been moving more recently. And a lot of the metals are starting to heat up. So the cycle in 2022, 2023, that's when things started to slow down. And I think at some point here, we're going to reaccelerate. Silver starts to come alive. And then you'll start to see lithium, which is a more inflation sensitive asset. Look at the purple here. So you can see GDX was kind of outperforming the entire way here, right? URA was somewhere in the middle here, April and onward. And then you can see more recently, lithium's been going more vertical here. Same with COPX ever since about August. COPX has been going more vertical. So I think what's going to come in a little bit, I can't tell you exactly when. I think oil and natural gas will come at some point over here. That's where XLE is lagging behind, and it will turn up at some point and join the commodity group up probably this amount, maybe next year. Jesse Colombo, and I had to share this because I don't see a lot of people doing ratio charts with Palladium. I had to share it. Palladium is trading near its lowest level relative to gold since 2008, indicating that it is undervalued and offers potential for future price appreciation. And this is palladium to gold ratio. And you can see 60s and 90s, it was really undervalued and stayed undervalued in the 80s and 90s. Then it just went off it had a major boom in the late 90s, all the way to 3.9. That is 3.9 ounces of gold to 1 ounce of palladium. Now, as you can see, we are down in no man's land again, where palladium is cheap against gold. And right now, Palladium only buys 0.33 ounces of gold. Now, there's other metals out there that are cheap against palladium. Platinum is the one that gets me super excited, as platinum is cheap against all of the metals. It's cheap against gold, silver, palladium, and also rhodium. So I think the biggest upside potential from a ratio perspective is platinum. Palladium is still good. I'm not saying it's bad. I just don't think it will outperform platinum, but I could be wrong. I'm not saying that I know everything. But usually when you see the three metals get incredibly cheap, that's a good time to buy. Palladium last time when it was in that when it was cheap against all the other metals was 2005, which was here, and 2009, which is here. Those are the two areas that you wanted to load up and then ride it for this bull market that it was in. If you draw a line across, this is your base. So you draw a line across here, that's your base down here. And if you bought the bottom of the base, which I luckily did in 2009, I also bought some in 2005. I rode it all the way up and then swapped it over here into platinum because platinum was and still is super cheap against all the other metals. When that occurred, just to give you an example, palladium was trading in the hundreds, 150, 140, 175 at this low here. Up here, it was trading about $3,000 an ounce. That's how big of a move it had. And then I swapped it into platinum when platinum was, I think it was like $700 or $800. That was in April of 2020. Whatever April of 2020 was, the ratio was really good. So I swapped my palladium for platinum. SILJ to $100 isn't the final move; it's the first move. So he's got a cup and handle there. I'm not sure what happened before this. I don't know if it came up. Cup and handles are continuation patterns. It doesn't really matter what it's labeled. You've got resistance here, and you're breaking through resistance. Now, we could get a pullback move for a retest on top of that. So it doesn't mean that we automatically fly. We could, not saying we can't, but a lot of the times you kind of break out and you kind of sit here and consolidate right before another big move. But $100, that's another 4 or 5x on top of where we are at today. So yeah, that would be an excellent move for SILJ. Here's Sam. It says the ASD green revolution is entering a brand new uptrend. So you can see we've got the downtrend here. We've got a double bottom. It's hard to see this unless I draw it in, but this is a bottoming pattern here. And then we're breaking that high there and moving on up. This is an equal weight basket of rare earth metals, lithium, copper futures, cobalt futures, and nickel futures. And they call that the ASD Green Revolution Index. And I've noticed, and we have partaken in a lot of buying in this area here of these exact things. We are playing rare earths, we are playing lithium, we are playing copper. I'm not playing cobalt directly, so to speak, and we do have some nickel plays too, where we're buying these at the bottom. And this has turned up. It looks really good, and we could see a big move in these materials. Kevin says compelling reallocation event. So gold is on an extraordinary run, but oil has only been cheaper once before at the C19 low. And this is starting to get more attention at the gold to oil ratio. Rightfully so. I mean, it's an excellent opportunity. Could we still see weakness in the very short term? We could. I'm not convinced that we just have to go higher. A lot of the equities, depending on where you're looking, are still squeezing up, have bottomed, and are heading higher, or have broken to all-time highs. So we have a huge discrepancy between the best in class oil equities and the kind of the lagging ones. We have oil equities, some of them are at not all-time highs, but they're at 10-year highs. Then on other oil equities that are very sensitive to oil price, they're more high cost producers, they're really close to almost their all-time lows. So this sector, it has the largest range from overperformers to underperformers of any sector, of any sector. You know, they always say a rising tide lifts all boats, and I agree with that. But I don't know what, I don't know if they're in different lakes. I don't know if they're in different oceans. I mean, there's a huge discrepancy between some of the stronger oil equities and some of the weaker ones. The largest that I've seen in the market so far. Sam Gatling, so he says integrated oil and gas stocks look ready to go, and basically we're stuck underneath resistance. It's trying to break to the upside. On this particular one, it's an equal weight basket of ExxonMobil, Chevron, Shell, uh, Total, BP, all the big boys, Petrobras, Suncor, and more. And those look really good to potentially break out here at any second. So what does that mean? If this is ready to break out, do you think oil is going to go lower, or do you think it's going to go higher? If it's going to go lower, why is the ASC Integrated Oil and Gas Index wanting to break upwards? Now, someone could say, well, you know, natural gas is going to be strong and oil could be weak. Maybe, but I don't think this would break upward. It feels like to me that the oil price has been drifting lower while everyone's been accumulating the oil equities. That's kind of what I see. And the patterns that I'm seeing are all big, gigantic bottoming patterns. It's like they don't want the oil price to go up yet because they're not done accumulating. I don't know, just saying that out loud. Another one from Sam. It says you probably don't own enough copper miners. Oh, we do. We own the good ones. We own the best ones. I should say the best one. Gold miners, GDX, all-time highs, breaking out peak above the peak in 2011. And then copper miners, COPX is also trying to do a catch-up move to gold, which is about to break its peak in 2011. They both look very good. These are double bottoms here. There's a double bottom. This is a double bottom too. You can draw a line going across there. There's a breakout, retest. Draw a line going across there, breakout, retest. And now we're breaking these highs here and starting to run again. Yes, it looks absolutely excellent. There is also a big discrepancy between some of these mining companies in the copper space and gold space. A lot of stuff peeling out, peeling off and heading higher while other ones are really lagging behind. Some of the majors, the big boys, they're all looking decent for the most part in the copper section. So Lynn Alden says, by the way, the government shutdown doesn't stop the train either. Here's a pretty useful chart for determining whether something stops the train or not. So this is her, whipped up thing. Will this stop the train? Yes. No, it won't. Crap. Keeps going. And then will this stop the train? No, it just keeps going. So there isn't anything that stops the train. There's nothing. They will keep printing money. That will drive these higher and higher and higher and higher and higher. It's going to keep driving. It and here's the thing that people don't understand. I'm going to try to make it as simple as I can, okay? Money printing is demand for commodities. That is your demand. Money printing and M2 money supply growth is demand for commodities. So if someone says, well, I don't know about if people can afford, buying whatever it is, XYZ. It's like, if money is being created and inflation is entering the system, that is the demand. And then if they're creating enough of it, inflation is very high on a percentage basis, then people don't want to own bonds and then they don't want to own stocks, which then accelerates this move. So what's going to stop the acceleration of commodity price? Nothing will stop this train. Silver Chartist, he says, friendly reminder, by my estimation, we're in the later innings of the largest crack-up boom ever recorded. This is the crack-up boom. Will this stop the train? No, no. There is no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as the result of voluntary abandonment of further credit expansion, or later as a final and total catastrophe of the currency system involved. So which one do you think it is? Are we going to abandon the credit expansion, or are we going to kill our currency system? According to Lynn Alden, they have chosen the currency system. Will this stop the train? Yes, no, it won't. Keeps going. And no, this is currency debasement. That's what that is. As Rick Rule is doubling down, by the way, you know what to do. Kramer said, I've sold everything, oil and gas. So Kramer, since he is selling everything, gives us the go. It is go time. And JC Parrott's energy is still flat since summer of '08, which is resistance, and we're jamming up against resistance ready for a gigantic breakout. So where do you think the opportunity is? Is it the thing that's already run a whole bunch? Or is it the opportunity where the one who hasn't run but is stuck just underneath resistance? I'm in the latter. I think that this is an opportunity. This is a better opportunity than a lot of other sectors. Not all of the other sectors, but a lot of the other sectors. And what are we seeing? We're seeing a lot of the inflation-sensitive stuff start to move. Platinum's moving. That's the most inflation-sensitive precious metal. We're seeing lithium break out. That's another inflation-sensitive asset that moves very similarly with energy. We're seeing coal companies move. I think it's just delayed behind, guys. That's all it is. Freight Futures AM update. Dry bulk smoking it. Capesize is up 4%, Panamax up 2%, and tankers are both up 1% for VLCC and Suezmax. Against all odds research, he says gold first, copper, then oil. Says, here we go. Kramer said, I've sold everything, oil and gas, and it's time for oil. Grady with Palladium. Palladium has an enormous 40-year parabolic base in the making. Another 21x move looks very likely. It will outperform even silver. Oh man, he is really bullish on platinum group metals, and so am I. The rounded bottom arc bottoming phase has now reversed the trend. The commodities bull is a true get out of the rat race opportunity. So here's the 40-year parabolic base indicating a huge move is coming. In his estimation, we have another third wave, another 2,118% move up, this time starting at $800. It would be a target of $17,000 an ounce. And if you use some of the ratios, platinum could get above $17,000 an ounce. I mean, guys, these opportunities are massive. Can you imagine what some of the platinum group metal mining companies that we got involved with at the bottom are going to be priced at? Do not mess this up by trying to time the market. Try to get try to get those emotions under control, guys. This is going to be a big one. The best thing to do is just don't log into the account, maybe. If you get in volatility. Now, some people say, you're in a bull market when you're in your account hitting refresh. You're in a bear market or you're in a pullback when you stop logging into the account. This is what the vision or path is. And if we get that type of move, I have a feeling that the mining companies are going to do something ridiculous. So we bought the bottom. We got about the best entry point that anyone could get. Don't blow it, guys. Please, don't blow it for my sake. Here's another one from North Star. Some interesting moves taking place in oil and energy stocks. What do they know? and that's a breakout there. And I think that's Enbridge. So big consolidation. We're starting to see breakouts. Now, I made the comment that some of the equities are starting to break out. This one is at all-time highs. And we're starting to see breakouts across the board in a bunch of different oil equities. Now, I'm not chasing the ones that are the strongest, perhaps. I'm going after the ones that are going to perform the best during the next bull market that we're entering here, or for energy when it takes off again. I want the big boy move ones. So I'm not too concerned if one or two is lagging behind and they're not a leader. I want the total ultimate return. I think some of these, they're going to do, I mean, it really depends on where oil goes. But I would say at least 5x, all the way up to maybe 20 or 40x, depending on how long we hold them and depending on how high oil goes. If oil goes from the most undervalued state to an overvalued state, then yeah, this is going to be one of the best sectors. If it does that. Not saying it will, but if it does. If you go from a 1 to 55 ratio of gold to oil and you bring that below 10, oh my goodness. The size of the moves of these oil companies are going to be ridiculous. And the ones that I'm more focused, heavily focused in, I think they're going to do really insane stuff because they can grow production 50 to 100% 5 years out or less. SVP operations. So oil equities holding up pretty well among this pretty significant oil price drop in recent days. I already read that one last time, so we're gonna end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special is the coupon code. We do have a Q&A session coming up at 5 p.m. Mountain Time. Sunday, 5 p.m. Mountain Time. All right, we'll catch you guys later. See ya.